If the Fed moves in September, Bitcoin will notice. If the Fed doesn't move, Bitcoin will still notice. Today I'm breaking down what the September 16th to 17th Fed meeting could do to the rates, liquidity, and crypto alike, and how I'm positioning around it. It's going to be a quick promise, no hype, just a simple framework you can reuse every Fed week. Let's go. Here's where we are right now. The policy rate is sitting in the 4.25% to 4.5% range. At the last meeting, the Fed held steady and kept the data-dependent language. Earlier this year, they also slowed the balance sheet runoff, so quantitative tightening is now more of a slow drip than a drain. That matters because liquidity drives risk appetite, and Bitcoin is a high beta liquidity asset. There are 3 dates I'm watching for before the decision. First, the August 12th CPI report. Second, the late August PCE report, which is the Fed's preferred gauge. And the third, the September meeting itself on the 16th and 17th. On the job side, we've seen softer payroll growth and a slightly higher unemployment rate. Nothing catastrophic, but enough to make a cut plausible if inflation behaves. Longer run inflation expectations have nudged up a touch. Sticky, not scary, which essentially keeps the Fed cautious. Now, I don't trade the odds, I trade the scenario. So here are 3 clean setups that cover almost anything the Fed can do, plus what I'm doing with Bitcoin in each one. Scenario 1. A 25 basis point cut with a dovish tone. Why it can happen? Growth is cooling at the edges. Job gains slowed, and the Fed may want to ease the brakes before the labor market cracks. If inflation isn't re-accelerating, they can justify a small move without signaling panic. What it means for Bitcoin? Easier financial conditions are a tailwind. I care less about the headline cut and more about real yields and dollar momentum. If real yields drift lower and the dollar softens, that's supportive for BTC. My playbook? I don't chase the first green candle. I scale in on red after the statement and the press conference in small tranches. For anything beyond Bitcoin, I stick to high liquidity names, keep size modest, and set wide stops. I keep dry powder because the first cut can still be choppy as growth gets repriced. Scenario 2. No move, but dovish guidance. Why it could happen? The Fed wants one more month of confirmation from CPI and PCE. If those cool, they can cut later this year. If not, they keep optionality. What it means for Bitcoin? Call it neutral to slightly positive. The slow drip balance sheet plus a gentle tone keeps the floor in place, but headlines can whipsaw price. My playbook, I use a laddered dollar cost average around support into the meeting. I wait for the press conference tone before adding size. If the dollar index and 10-year real yield both roll over, I add on weakness rather than strength. Scenario 3, a hawkish hold. Why it could happen? If core inflation surprises hot and expectations stay firm, the Fed stresses patience. Quantitative tightening is still running, just slower, and they can afford to wait. So what does it mean for Bitcoin? A hawkish tone with firm real yields is usually a risk-off knee-jerk. BTC tends to wobble when real yields actually jump, even if the bigger liquidity picture hasn't changed that much. My playbook here would be to protect the downside with tight invalidation levels. If we get a fast flush into obvious support and real yields start to fade, I scale in very small. If yields keep pushing up, I stay patient and let the dust settle. There's one simple checklist that I care about into the meeting: CPI year-over-year trend, core PCE monthly change, and the 4-week average of jobless claims. If CPI is tame and PCE doesn't pop, scenarios 1 or 2 are still essentially in play. If either metric re-accelerates, scenario 3 gains probability. Let's talk about liquidity because that's the quiet driver. Bitcoin reacts to global liquidity and real yields than to any single headline. When broad money and financial conditions ease, BTC behaves like a high yield beta liquidity asset. That's why the pace of balance sheet runoff, treasury cash swing, and the dollar trend matter alongside the policy rate. A small rate cut with a slow balance sheet runoff can be bullish, even if the statement sounds boring. Here's how I'm handling that calendar. Before August 12th, I keep positions nimble and avoid leverage. Rumors and preview notes can move markets more than the actual data itself. Between CPI and PCE, if CPI cools, I let winners breathe, but I don't oversize until PCE lands. If CPI runs hot, I reduce beta, wait for PCE for confirmation. After PCE and into Fed week, I prefer staged entries on weakness, not chasing strength. I plan for 2 moves on decision day. The statement spike, then the press conference drift. Risk controls I actually use position size first, conviction second. Max allocation rules, so no one candle doesn't wreck the month. Preset invalidation levels that I respect even if it hurts. On the day, I'm listening for 4 things. 1. The statement line on inflation progress. 2. Any mention of slack or concern in the labour market. 3. Balance sheet language that keeps treasury and mortgage caps at slow drip levels. 4. Powell's tone in the Q&A as he's more worried about growth risks or inflation risks. If he leans growth risk and the dots later confirm a gentler path, that's risk on for BTC. If he leans inflation risk with no cut, expect a chop and then a trend. A few quick questions I get every Fed week. Should I buy before or after the meeting? If you're a trader, liquidity is thinnest right into the release and slippage is real. I prefer sizing after the statement when the spreads normalize. If you're an allocator, define your time horizon and max drawdown first. Then actually go ahead and consider small stage buys on both sides of the event. Do rate cuts always help Bitcoin? No. If cuts arrive because growth is cracking, risk assets can actually drop first. Liquidity helps, but recession fear can dominate for weeks. Context really matters here. What if the market has already priced the cut? Then watch real yields and the dollar. If they keep easing after the decision, BTC usually follows. If they snap higher, I fade the first pump. Here's the clean recap. The key dates, guys, are August 12th CPI, late August PCE, and the September 16th to 17th Fed meeting. The current stance is the policy rate in the mid-4s and quantitative tightening slowed to a drip. Labor is softer at the edges. Inflation expectations are a touch sticky. For Bitcoin, liquidity matters more than the headline. Manage size. Let the data confirm and don't chase the first move. If you want my morning of checklist for decision day, comment the word playbook. Tell me which scenario you see coming out, cut, dovish, or hold, or hawkish hold. If this was useful, tap like so more people can see it, and subscribe for the post CPI breakdown. I'm Satoshi Aoki. Thanks for watching. I'll see you after the CPI. This is education, not financial advice. Thanks for subscribing. Cheers.